ledger. And then we also said that it can be referred to the total account.
Okay, go on. Unless that's the point you want. Okay, you can continue.
Yes, please. So we also said the control account can be referred to as the total account. That show the total of the balances of the various accounts. Yes, please. That the control account represents.
Okay. Wow. Charles also departed. Okay, anyway, let's continue. So I think we were able to look at the two types of control account, and we said that we have the purchases ledger control account, also known as the creditors control account, as well as the debtors control account, also known as the sales ledger control account. I think we looked at the formats and the items that are used to prepare these accounts. So particularly on the creditors control account, we saw, or the debtors, we saw that amongst the items include credit sales, dishonest check, discount allowance, all the items that affect debtors balance of a business. And most importantly, I also spoke about the sources from which we get these items to prepare the control account. Okay. I think we wrapped up with the format of both the sales ledger control account and the creditors control account. But we're left with few things to look at, specifically the transfers and closing balances, the transfers and closing balances. But I want my professors to note that I did indicate that when you are preparing these two accounts, you should use these principles. And I remember saying that, especially when you pick the debtors control account, since debtors have a debit balance, if the item is going to increase the balance, you debit it. And if the item is going to decrease the balance, you credit it. Okay. You can also use the application of personal account, the double entry application on personal account, debit the receiver, credit the giver, right? Also to get to record your items at the right side of the account. But we also noted that for creditors, they have a credit balance. So if the item is going to increase their balance, we credit, and if it's going to decrease their balance, we debit. So that is the opposite of the debtors account. So for creditors, since they have a credit balance, when the item is going to increase it, we credit, and if it's going to decrease it, we debit. Okay, so we saw items like credit purchases increasing the creditors balance. Okay, return outwards reducing it, discount receive reducing it. That's why you have those items at the debit side of the creditors account. And then when the business pay cash or check to creditors, it also reduce their balances, as well as bill payable. I think I spoke about the bill payable and the bill receivable. Okay, as negotiable instrument that acts as title to money. Okay, so it behaves like cash or check. Okay, if there are no questions, I would move to the transfer of balances. Then maybe we can start solving illustrations. Please, if you are confused at any point, me know. Now, the transfer of balances is very simple, but if you are not careful, you would always be missing them up in your control account. So let me open a fresh page. Now, to set the basis right, you know in accounting we have two main balances, a debit balance, okay, and the credit balance. So the point we are trying to make here is that you can be asked to transfer a debit balance from the sales ledger control account to the purchases ledger control account. So let me use SLCA for the sales ledger control account. And then the purchases ledger is PLCA. So you can be asked to transfer a balance from this account to that account. Okay. Now it's very simple because let's take for example, you are asked to transfer transfer a debit balance, okay? And I think I would let my professors express their views on this. Transfer a debit balance of $500 from the sales ledger control account to the purchases ledger control account. So professors, let's do the analysis. We are being asked to transfer a debit balance from the sales ledger control account to the purchases ledger control account. So you always need to know your starting point before you can look at the destination. So the first question we ask ourselves is, where are we transferring the balance from? And the answer is we are transferring it from the sales ledger control account. We are transferring from this account. Now, you know that if you are transferring a balance, what balance are you transferring? It's a debit balance. So it means that that balance is at this side, right? The debit side of the sales ledger control account. So if we want to transfer, then we can only put the entry where at the credit side. So you will indicate transfer okay, 500. And you see that when you get to the destination, because you are transferring it to this account, if you get to the destination, since you have credited your source, the corresponding debit will be where? In the purchases ledger control account. So again, you indicate transfer and you put the figure there, 500. So that is how you do the transfers. So if you paid attention, you realize that the first you have to identify is the source. From which account are you doing the transfer? If you identify the source, ask yourself, what balance are you transferring? If it is a debit balance, then it means your entry should be on the credit side. If it is a credit balance, then your entry will be where? At the debit side. So I tell my student to use the from, okay, where you are transferring from. Okay, you always go the opposite of the balance you are transferring. So if you are transferring a debit balance from an account, you credit it. right? And vice versa if you are transferring a credit balance from an account. But when you get to the destination, so the two, okay, when you get to the account where you are supposed to transfer to, your entry is always equal to the balance on the balance that you are transferring. Please, are my professors okay with the transfers? So I'm going to give a second one for my professors to try or explain to me how we'll do the entries. So let's take, for example, transfer, or let me make it credit balance of $120 transferred from sales ledger. When you see SL, that's sales ledger, to purchases ledger. So who would attempt this for me? Professors, I'm waiting. Who would try the second one for me? Credit balance of 120 transferred from sales ledger to purchases ledger. Oh, please don't give me that silent vibe. I beg you. I want to hear a response. If you didn't understand, then let me know. Okay, but if you don't express misunderstanding and you don't respond, okay, I guess I would have to continue talking. Okay, so in the second example, you are transferring a credit balance of $120 from the sales ledger to the purchases ledger. So what it means is that you need to determine the account from which you are transferring. And in this case, again, we are transferring from the sales ledger control account to the purchases ledger control account. So this is the source where we are transferring the balance from. And the balance is a credit balance. So we are supposed to transfer a credit balance, and that balance is from this account. So our entry should be on the debit side. So you indicate transfer, okay, transfer of 120. And then when you get to the purchases ledger, it will be at the credit side, because if you have debited, the corresponding entry will be here at the credit side. So that is to say that for the transfers, it affects both the sales ledger and the purchases ledger control account. So when they give you the illustration and you see transfer this amount or this balance to this account, that is how you approach it. identify the source, okay, know the balance you are transferring, and put in the right entry to remove that balance and put it in the right place. Okay, so we can pick a few illustrations and solve, but before that, let me hint my professors that we all remember from our double entry days that opening balances are represented with balance brought down or balance BD, and closing balances are also described with balance carried down or balance CD. So as we indicated that control accounts are self-balancing, there are illustrations where the closing balances will be given to you or the balance carried down will be given to you. And it's very simple to record your closing balance, okay? So let me demonstrate that one too here. If this is your account and you have been given a balance carried down or a closing balance, you need to ask yourself, what balance carried down is that? What closing balance is that? If that closing balance is a debit closing balance, then your balance carried down will be at the credit side. Please note that. If the closing balance is a debit balance, the carry down would always be at the credit side. But if it is an opening balance, which is BAL, okay, balance BAL, BD, balance brought down. Then for that one, if it is a debit balance, you put it at a debit, like you know. And if it's a credit balance, you put it at a credit. But for the closing balance, you always go the opposite side, the carry down. So if the closing balance is a debit balance, then you should put it at, or you should put your balance carry down at a credit. So I'm just alerting you on that because it will pop up in some of the illustrations. So let's look at illustration 1. I think we'll read the question and we'll solve it in the second session. Okay, so there you have the question, and this is how the questions are normally given. They give you the items and you just prepare the two accounts, putting in the right items. So that's why we had to go through those two accounts and know the items that affect each of these accounts that we are looking at. So you have the following for Mr. Bar Limited. So you see March 1st, debit balance in the sales ledger. And of course, with the date attached, I think all professors know that this is an opening balance. Then credit balance in purchases ledger. Okay, total credit sales, total credit purchases, total cash sales, total cash purchases, sales returns and allowance, purchase returns and allowance, cash received from trade credit debtors, cash paid to trade creditors, discount allowed. So you appreciate that the question will give you the items that we have already looked at. Okay, what is important is to know that this item affects debtors, this one affects creditors, and put it in the right account. However, there are certain items that will not affect these accounts, and you don't need to record them simply because they neither increase or decrease the balance of the debtors or creditors we are looking at. So I'll give you more hint on that in the second session. Let's meet in the second session and continue. Thank you.